Let's go. Awesome. Well, thank you so much for joining us here, all the way from Singapore. Really excited. There's a ton of really great Web3 projects and traders and all sorts of personalities that come out of Singapore. I feel like Singapore is a really great country for NFT crypto. So thank you for joining us. Real quick, do you mind just giving us a quick introduction on who you are and kind of what brought you into Web3, and then we'll kind of get a little bit more into the project.
Sure. Thanks for having me, on your AMA. So my name is Nibel, and I am the founder of PokPok Protocol. And essentially what PokPok Protocol is, it is a gamified options platform where we intend to bring options trading to the masses. And the conceptualization of the protocol is closely linked to my background in both the TradFi and the Web3 space. So personally, I've spent about 7.5 years in TradFi at both JPM and CD, doing a range of things from credit lending to projects to ultimately sales and trading in derivative options on equities and commodities mainly. And after I got kind of bored at TradFi, I decided to give myself a big challenge and move on to the Web3 space, and that was just at the height of GameFi summer. And after I came, 2 crashes came. We witnessed 2 crashes, so I wouldn't say it was the best time to move, but learned so much from the space. And when I moved, I actually moved to a GameFi company called Atlas Metaverse. And at that time, that project really stood out to me. It was a Polygon. It is a Polygon-based project, which has gone on to multi-chain via Layer 0 now. But at that time, they were one of a few projects that focused on hyper-casual games and Web3. So, hyper casual games, people pick it up in a few seconds. And I saw that as a great way to onboard, just retail users in a very friendly way. It's just like lowering the barriers to entry, lowering the learning factor. And so I came on board. But that was also, the play to earn meta at that time. So, XC and all the variants that came out of it. And that all came crashing down in the summer, after the Terra crash, right? So everyone was like scrambling, trying to find out like, hey, yield farming doesn't work that well with games now, right? Can't really print our own tokens. So what do we do? And that sent me, thinking about what would be my version of GameFi 2.0, where cash flows, earnings are driven by sustainable economic activity. And took a look at the space, and close to my background, naturally would be DeFi. And in the DeFi space, I was looking at 3 things that could possibly support sustainable yields. Number one, it would be spreads. So take DEXs, exchanges that take, that process huge amount of transactions and take transaction fees. That's kind of risk-free if you manage it well. Second one would be capital allocation, right, which performs a real function in the economy, where, allocating capital from people who have extra capital to people who need it, and you're also able to take spreads. And the third one, which was also the most interesting to me, was the structuring of financial products, because that is kind of a moat in and of itself. You have the financial expertise, kind of to put together a financial product in the Web3 space. And now, with the things that I've learned, we can actually gamify how options are thought of. And that was really interesting. So, I picked the third one and I went with it, and PokPok Protocol was born.
That's a great introduction and a great of kind of like, what led you to this space. Now let's I guess kind of dive in a little bit into PokPok protocol. I love the name. Even more so, I love the aesthetic you guys are going for. I'm a huge gamer myself, and I think you guys are hitting that indie game look so well. So tell us a little bit more about how exactly you guys are gamifying options. Give us kind of an example and kind of a breakdown of how that's possible, um, how much fun it's going to be, things like that.
Yeah. So we wanted the protocol to be fun and engaging, and yet still maintain its simplicity, because at the very heart of the protocol, we are trying to educate players about the option space. And so we felt that the best way to do it would be via kind of a chicken NFT raising game. So it's, very linked to Tamagotchi. So how it would work is when you mint a chicken NFT in the protocol, that actually represents opening an option position. And you kind of raise the chick and grow it into a chicken throughout the tenor of the option. And at the very end, depending on your call, whether your option is in the money, out of the money, you get to perform various different actions with the chicken, things like cashing out or even staking or even sending the chickens to do battle with other chickens to amplify your profits. And that's where the DeFi, the GameFi degen plays really come out. But at the very heart, the protocol is powered by a financial, I wouldn't say innovation, but a financial kind of synergy with the buy now pay later model, and we call it pay as you go. So this is a very key factor in enabling like the PokPok protocols developments. So where maybe drawing an example would make it clearer. So in a traditional option model, you actually pay the premium upfront. So say if you buy at the money call on Ethereum, you maybe pay $150, for example. But what we are saying now is in PokPok protocol, you are actually able to only make a down payment of say 50%, say $75 or $80. And the remaining 50%, you can actually observe the market and decide every day or every every periodic interval whether the market is still trending in the same direction that you initially thought it would. And you observe the market and you consciously decide to deploy additional capital to service the remainder of your options loan. And this action of servicing is actually the feeding of your chicken. So paying the down payment is actually minting your chicken, and feeding your chicken and keeping it alive is actually servicing the option loan. And if one day you decide that, or maybe there's a crash, right? And Ethereum drops to like $300, you kind of in the traditional model, you would kind of write off your $150 that you paid up front. But now in this case, we are saying that you can choose to default, right? You can choose to, if you default, you lose like 50% plus maybe 10-20% that you've serviced so far. And instead of losing $150, maybe you lose like $80, $90. And so that is a cost saving for you. And it's perfect for newcomers that come into the space who want to try options, but they are kind of risk averse. So what we're trying to do is trying to create a lower risk environment for these newcomers to learn. And with that also comes like, lesser profits, lower risk, lower return. And that is actually kind of priced into the minting of the initial chicken NFT via pricing models. So that is how it works. But I do realize that I've gone a bit into the technical part of the protocol, which may not sound that fun. So going into the more fun part, right? So you mint the chicken NFT, it represents an option position. You kind of get to make a bullish call or a bearish call at the point of minting, and you feed your chicken. And as the market moves, up and down, whether you move from in the money to out of the money, your chicken visuals actually change in the game. So because we want to make it very visual for everyone, so as the chicken gets more profitable, it might grow. Each chicken, when you mate, comes with a time bomb strapped to it, right? And you have to decide whether to cut the green wire or the red wire, right? And that represents calls and puts. And as the markets move, the ticking, right, grows louder, softer. Your chicken expressions change. They look more panicked. They look more calm. And these are the visual cues that we want to give to the user to make it a little bit more interesting.
That's like my head's filling up with so many different kinds of questions and different ways areas to take this. So needless to say, the health of your chicken goes up and becomes better as the option performs well, and the health of it goes down when the health of that option goes down. Is that safe to say?
Yeah, pretty much.
Very generalized. Okay, that is very interesting. So now comes the part that no one likes to talk about, especially since DeFi has kind of gray areas overall.
Mm-hmm.
Legal wise, right? A lot of us are in the United States. Where does that put us in the protocol? Has there been any kind of commitment to different regulations or anything like that, or is this kind of living on the wild west of Web3 and DeFi?
I would say it's kind of not really catered to any specific regulation right now. But what we will do is we will dissociate the action of trading options with the game. So what users will be interfacing with is the game, and at the back end we would be generating the yield via options. So we kind of artificially break that linkage, right? So instead of if you go to a trading platform and you buy an option, that's outright purchasing an option, right? That's a financial investment. But what we're doing is we're saying that, hey, you guys, if you're US based, you interact with the gaming platform, right? And the gaming platform gives you profits or gives you losses, and separately, that is leg one of the flow, and leg two is the game protocol will go out and hedge the options in the exact same way that you interacted with the game platform. So if you buy a call, in the game, essentially you are just buying a chicken, and that chicken may give you profits or may not give you profits. And the second leg, which is split out from the first leg, would be us going into the market to hedge the options out. And I don't know if that helps clarify like regulations in any way.
It doesn't, but in the correct way, in the way that I expected that to be. I don't think anyone expected you to be over in DC, shaking hands and doing things that finance doesn't even do, right? So that makes a lot of sense, and honestly, that gray area is where we live in right now in a lot of ways. So thank you for at least clarifying and kind of confirming that. Now, getting back to the fun stuff, this really reminds me of a more gamified, clearly more gamified version of how, Uniswap does their liquidity providing, right? You create a position, you put up funds, and you get an NFT that represents that position. Was there inspiration there? Or kind of give us a little bit of background on how you guys kind of came up with this idea.
Interestingly, it's not Uniswap that we got inspiration from. It was actually DeFi Kingdoms. At one point in time, it was one of the biggest, if not the biggest, GameFi protocols in the Web3 space. And interestingly enough, that game, DEX was the DEX that brought me into crypto. That was my, I only came in into Web3 last, I think, September or August, maybe August. Got did my hands in DeFi Kingdoms. And at that point in time, I was like really confused, like, hey, what are liquidity pools? What's bridging? What's Harmony, right? Like, lost money. My first $100 I put into my MetaMask, I think I transferred it, it got lost. It went into the black hole somewhere. I don't know where it went. Took me a while to figure out. But because I looked at the game and I was like, hey, this is quite interesting. Like, an exchange made visualize in the form of a game. And that really helped me understand a bit of the crypto space. It sort of piqued my interest. And since then, I have been a huge fan of education through gamification. And there is a value in visualizing and making everything kind of relatable to the end user. So when they perform an action, they may not understand it at the start, but they kind of understand like the visualization of it, and gradually, as they interact more with the space, they kind of gradually learn more. So you kind of ease them into that learning journey. And so that was kind of the inspiration behind it. And so we were thinking, if we are able to visualize, options trading and slowly, starting with vanilla calls and puts, but slowly ease in more structured products, maybe some digitals, maybe some structured products like fixed coupon notes, your bonus enhanced notes, things like that. We could actually make these products that in the TradFi space are available to the maybe only like 2%, or the high net worth people. We could make these products available in a low risk way, and because of automation provided by smart contracts, make it operationally feasible to provide it to cater to the mass market. So make these products widely available to everyone in the space. And that is kind of in the spirit of decentralization and Web3 community.
Yeah, no, definitely. And I'm sorry if you hear it in the background. My dogs are swarming on me right now for some reason. So if you hear them licking on my face, I apologize. But with that, yeah. So my question kind of lends to kind of experience here in terms of traders, right? You're going to have some people who are really, really comfortable trading options and putting in orders like that. You're going to have people who are new to it completely. I know a lot of people, especially here in MVHQ, that have had success and want to jump on and see if they can do it, but they're too scared to. Seems like this is a very good entry for those kinds of traders who want to know more, want to learn how to do it, but don't have a great platform to learn how to do it. Would you say that this platform is kind of anti-veteran traders like that? Or do you believe that there's going to be a culmination of kind of both beginners and veteran traders that'll be interested in the protocol?
I think when we ideated the protocol, it was really catered to newcomers, providing a safer, not safe, but safer space for them to learn options trading. But that being said, anyone can use the protocol because like the options are fairly priced. So you actually kind of pay a little bit more for the option to back out and cut your losses. So I would say everything in the protocol is a market price. So veteran traders, if they see value in the mechanism of pay as you go, helping them to better manage their risk, they're most welcome to do so as well. So I would say it's not biased to the protocol. The pricing itself is not biased to any particular group. But the intention of gamification is really more for the mass market and for the retail guys, people who have heard of, but maybe don't have the confidence to trade. And I can tell you from like my experience in my limited experience in the TradFi space that, even high net worth clients, like 95% of them kind of lose money when they trade options, because even though they may get the direction right, the direction of the asset movement right, more often than not, they get the timing wrong. So the speed of that movement may not be quick enough, right? So, if within the tenor of the option, the price doesn't move enough, it only hits that price after your option expires, you kind of are unprofitable on that position. And that is what many people struggle with.
Yeah, no, me being someone who would say that he's pretty well versed in option trading. I've gone from being $10,000 up in a position to literally losing that $10,000 10 minutes later. So again, it's absolutely not necessarily about being right. It's about when you're right. So I love that. Kind of want to talk a little bit about the development of the game ification element, because that stuff's not easy. Even the graphic elements that you guys are using, again, really high quality. Are you guys utilizing a game studio or working with a game studio to develop that, or are people on your team familiar with working on a game like that? Was there, give us a little insight on how exactly the game part of this came together.
Oh, sure. So we are kind of a offshoot of Atlas. So Atlas has like a lot like experience in developing so many casual games, and they have really awesome designers and game developers. So we are kind of powered by Atlas as the gaming platform side. And on the exchange side, we would start with being powered by Deribit, and then branching on chain to hedging both centralized on the centralized exchange and on chain option like vaults. So I think we have a team of about, it's a really lean team right now. It's about two designers, one smart contract guy, and the marketing team is a little bit bigger, about three marketing people, and there's me. So it's a really lean team right now. But we do have, I think the reason why we're able to operate this leanly is because we have gone through so many cycles of launching games and developing games and reiterating. So it kind of comes naturally. We are also learning from the space. Web3 projects are really getting better at their quality. So we've seen like how some projects like Gangster All Stars, they've done like a story mode during their minting, and we thought, hey, that would actually fit in pretty well with what we are doing, because essentially we're not a PFP project. We kind of are gonna be building like a world of like how it looks like on the farm, with the farmer and the chickens and the barn and the coop. So that story mode, if you go to our homepage, PokPok.io today, you'll see that we lead you through a story mode that gives you a glimpse of how our world will look like, right? Like how will it look like on a farm? How will it look like when you mint a chicken? And interestingly enough, we are, if you go through this story mode, you'll be asked to connect your wallet. And we, at the end of story mode, we will assign you a metadata. So you either get a bullish metadata or bearish metadata. And when you mint our Genesis chicken, that metadata would be transferred to your NFT, and that would have staking benefits. And staking, when you stake your Genesis NFT, you actually get profit sharing tokens called golden eggs, which entitle you to a portion of the protocol's coffers.
Okay, understood. So something we haven't talked about in the protocol is where it's living and breathing. What chain have you guys chosen? Is this on Ethereum, or is this going to be on a side chain?
So the mint would be on Ethereum, because that is where we think the majority of the retail like mass market would be, which is in line with game educating them. However, due to the nature of The protocol being, you have to make multiple payments to service your option position. The gas fees are not going to be cheap, right? So if it's like $100 option and you pay gas 5 times, that's like 5% more expensive. So on your option premium, so it wouldn't really make sense. So we have decided to launch on DFK chain, mainly because the demographic of users would be extremely would have a lot of synergies between their community and our community. Right, they're both well versed in like GameFi, interacting on chain, and that would be and it's really a quick speed. Speed is actually one crucial factor which we need to consider when we develop the protocol because of market movement. So, when you kind of mint your chicken NFT, we actually hedge it with the options exchange, but because it's smart contract based, so it takes time. Sometimes it may take like 2 seconds, 3 seconds, and if there's a lag or if it's too slow, price also move. But what we're doing is we are locking in that price for you the moment you interact with our smart contract. So, whatever lag time there is, we actually hold incremental price risk to price movements. And so we really wanted a fast chain. And we were considering Arbitrum would be a very good alternative because like the options guys are there. But ultimately we decided to go with the DFK chain because we felt like the synergies with like a gamified protocol would be the greatest there. Yeah, and it's a quick chain as well.
Okay, understood. Well, this is amazing. So I another thing I want to ask, and this kind of comes with trust. Obviously, there are a ton of really bad things that have happened to DeFi protocol. Even some of the most famous, DeFi protocols. I think of Cream Finance and Machi Big Brother, and those kinds of situations where something's been hacked or maybe there's a bad actor in some instances. Can you give us a little insight on, are you guys a docs team? Are you guys a private team? Give us a little insight in that, and then maybe another insight into who's backing you guys. Are you guys privately backed, or do you guys have, some public companies, venture capitalist companies that are also backing you? Maybe answer those 2 questions for me. Thanks.
Sure. Yeah, it's really unfortunate. The recent events in the crypto space really cast a very long shadow over all of us, like good actors remaining in the space. But I would say our team is fully doxed. So I'm doxed. I'm actually the CFO at Atlas Metaverse. So if you search Atlas ETHLAS, head of finance on LinkedIn, I'll pop up. Right. My name is Nick. Based in Singapore. I'm fully doxed. So is the founding team at Atlas, and Atlas is backed by Sequoia, Dragonfly, and Makers Fund. They raised 8.7 million. We raised 8.7 million back in March. So what we are doing is I have spun up PokPok as an offshoot of Atlas, and we have entered kind of a agreement, a sister company agreement with them to utilize some of their resources to develop PokPok protocol, and we are kind of raising funds with a mint. And once the fundraising is done, we develop protocol, then we would be a independent offshoot of Atlas Metaverse. And so everyone is fully doxed. So I think on the accountability portion, and I would say as head of finance at Atlas, we have had almost zero exposure to FTX and Terra. We knew that yield farming was, personally I put in money in yield farming, but I never ever put like company funds into Terra because my duty is to pay our employees salaries until we develop a great product. And our job was never into like yield farming for profit. And so, in terms of financial prudence, you can be assured that the same would be adopted for any protocol that I hit. And on the second point, sorry, what was the second point? I kind of lost my train of thought.
You kind of answered it, but I was gonna have you elaborate. It's when it comes to companies and venture capitalists funding you guys. I know you mentioned. I know you mentioned that you guys are funded by, I think, yes,
Dragonfly and Makers,
but not directly. Correct? Are there any of the venture capitalist funds that are backing this project specifically?
Currently, not yet, because we realized that once the protocol launches, we would be revenue generating from the onset. So it is, we would be revenue generating, and we would want freedom to redistribute profits to holders and use it for the game. We kind of want to minimize having to redistribute profits back to VCs, because if we can raise funds independently, we want to give it back to people who supported us at the start. And that is, we do need a community to grow the protocol. So we think that's a better alternative. I think we are not backed currently, but we were in initial talks with Ava Labs. They were kind of trying to get us to build on their chain, but ultimately we went with an AVAX subnet instead. But I think talks are still ongoing. But I would say, even if we do raise any funds, it will not be very substantial. And I don't think we are actually in need of funds to develop the protocol. We're not in need of any VC funds. Let me clarify that, because we do have resources currently already working on the project.
Understood. Thank you for kind of answering that part of it. I know it's not easy to necessarily talk about those kinds of things, but I think that answer was really sufficient. So thank you. My kind of lines of questions have gone kind of dry here, and I don't see any guest questions. So I want to make sure that I do you guys justice and give you guys a little bit more room to kind of speak. So kind of my last question always is, one, is there something about the project that we haven't discussed that you're really excited about, that you want people to know before we stop? Or two, if we kind of been over everything, maybe give us one last kind of pitch, so to speak, on why we should be really excited about the protocol, maybe when it's launching and things like that.
Sure. Maybe I think something interesting for everyone here would be talking about Golden Eggs, which is our profit sharing token. And essentially it's more than just options platform. We kind of incorporated layers of game theory into the protocol. And essentially what it means is, when you end up with a in the money chicken at the end of its tenure, there are certain choices you can make. You can choose to cash out the chickens, and on the back end, once your option matures, we would actually, and it's profitable, we would actually exercise it with the exchange and keep it in stables, so USDC or USDT, and that is your money, right? But if you decide to delay your cash out, so if you decide to stake your chicken with us and delay your cash outs, we will grant you profit sharing tokens called Golden Eggs. And why that action is so valuable to us is because if you delay your cash outs, and keep your liquidity with us, we can potentially bootstrap that liquidity to grow the protocol. And therefore, we are rewarding you with profit sharing tokens called golden eggs. And I think that is one option you can make. So you either cash out immediately and you take your profits and you exit the protocol temporarily. The second one is you can choose to stake your chickens, your profitable chickens. And thirdly, if your chickens are not profitable, you can choose to burn them for a token sum of golden eggs. So it would just be a very small amount. And subsequently, when you do have golden eggs, I think the really interesting part is how do you use those golden eggs to claim the protocol's profits? So profitable chickens are not easy to get because you essentially need to get your position, your call right. And so, the amount of golden eggs in the economy will be limited by the number of people who can make the right calls. And even among these people, they would have to fight for profits in the protocol. Right. So where do these profits come from? It comes from every transaction that happens on the protocol. We put a small tax on it and it goes into like the protocol's profits. And a portion of these profits will be allocated for redistribution back to the community. And how the claiming process works is, say, if Ryan and say Johnny has and myself, right? We have in the money chickens, we stake them, and we each have one golden egg. We actually need to burn the golden eggs, permanently, to claim a portion of the protocol's profits in a time-gated manner. So, for example, within this week, say the protocol has accumulated $100 of profits. And how that profits are distributed among the three of us is dependent on who burns how many eggs. So, for example, if Johnny, Ryan, and myself burn one egg each, we would get $33.53, right? But if, say, only Johnny and Ryan burns one egg each and I don't burn any, right, they will get 50%, right? If none of them burn and only I'm the only one that's burning, I just need to burn like 0.0001 egg, golden egg, and I actually claim $100 of profits. And so my profits are very dependent on what Johnny and Ryan does in that particular week. And when I burn my egg, I actually don't have much visibility over what they are doing. And I can only gauge their actions this week on, what their actions were the last week. And so there's a lot of like prediction and, strategy going on, right? If you were super bullish on the project, you would accumulate as many in the money chickens as possible, stake them, and accumulate this huge amount of golden eggs. And, and wait for a day where the protocol is really profitable with a lot of users, and you cash it, all in at once, and you kind of are able to get a good chunk of the profits. But if you are not so bullish, you think that you would just want to cash out ASAP. Maybe macros are bad. You think that the protocol wouldn't grow quickly. Your best option would be to burn as many eggs as you can every week, and drain as much profits as possible from the protocol, right? But so the only way that this wouldn't work for you is if new users are coming in quicker, or they're deploying more money such that the profits are growing exponentially week on week. And so that is a decision that you kind of have to monitor, the growth, look at on-chain stats and how we're doing, and make the decision yourself. So that's one interesting, I think, would bring a lot of depth to the game even after your options end.
Yeah, no, the gamification goes beyond what I was even imagining. So thank you for clarifying that and bringing that up. That's amazing. Well, awesome. Well, it's been a pleasure having this conversation, and even more of a pleasure to know that there are people out there trying to make things like this that do focus on education, but also that focus on making quote unquote degening fun on more fronts than just it being fun to make money and gamble money in itself. So I really do love this idea, and I'm surprised no one's thought of it before. Matter of fact, I could see this working out in the real world. So in traditional finance, how revolutionary would it be if Robinhood implemented something like this, right?
I have to speak to that because I did think of this question before, like, hey, it's actually quite a simple idea. Why hasn't it been implemented in TradFi? And the answer I came up with was that it would be super operationally troublesome to process, so for example, in TradFi space, like, operations teams, they process like settlements of options, stock deliveries, and it can get like, even with one payment per position, it can get extremely messy already. Like, stock deliveries go missing, your clearinghouse, something screws up. And this all goes away with like automation via smart contracts because it's user triggered and you make like multiple payments, everything is handled by the smart contract. It's just straight through processing. And this wouldn't be possible in the TradFi space because like if you like, amplify each position with like 10 payments, everything just like blows up exponentially and people would it would just not make financial sense for people to process this kind of like buy now, pay later. And especially if we're talking about smaller positions, right? Catering to like, like $100 or like $1,000, like minimum sizes in TradFi for structured products, like maybe, 100, 150K to 100K per position, for all those high net worth clients. So no one's really catering to, the smaller guys, right? The retail guys. So it is a underserved market that, no one is trying to target right now. And this all becomes possible because of like smart contracts. So, that is really exciting. And it opens up so many opportunities, right? If people think along this logic, there's so many more things that we can do that is not possible before, right? Either it doesn't make financial sense, it's too costly or too time consuming. And that is why, I think I'm extremely excited about what we're doing, really looking forward to the launch. Yeah.
Excellent. Well, I'm looking forward to it as well. I just love innovative ways to think of finance, to think of these kinds of things. So thank you so much for your conversation tonight. I look forward to seeing everything play out, and can't wait. So make sure you guys follow PokPok Protocol on Twitter and keep up with how things are going. So thank you so much for your time tonight, and have a great night.
Thanks for having me. Cheers.